But Pankaj, we have a new debutant on the Lal Street, Varroc Engineering, and here's Tarang Jain, the Managing Director, joining us. Mr. Jain, congratulations on making your debut at the primary markets, being a former member now of the Lal Street. Look at your intraday chart. Let's bring it up for you. Right now, the stock is up almost 5%. Did you expect this kind of a response, particularly from the institutional investors?
Yeah, I did expect a good response from the FIIs and the funds. The reason is that we were closely interacting with them all throughout, and I would say that we listened to them. We listened to what they had to say. So when it came to valuations, we did something which they were comfortable with. So we were quite expecting this kind of a demand, from the FI and the domestic fund side.
Yeah, but look at the gap up. You first saw a gap down on trade, and then we saw that big spike coming in. You're 6% in the green as we speak. You've also given your investors an exit via the offer for sale. So tell me, how much cash are you left with? What are your plans for deploying it? This is a big thumbs up you're getting from the Lal Street.
No, so this 15%, which we have diluted, the main reason is that the P firm Tata Opportunity Fund is exiting. So they have a 13.7% stake. So it's basically to give them an exit, and then there's a secondary sale, by me, of about 1.3%. So at the moment, there's nothing really coming into the company because we have a strong net debt to equity position. We're at about 0.3. And we are pretty confident that going forward, all our expansions, whatever we are doing in the coming years, would be managed through the internal generations. That's the reason we have not gone for a primary at present. But going forward, we have another 10% to dilute, in the coming 3 years. So we are looking at some M&A activity, and if there is a larger acquisition, we can identify. We could go in for a primary, issue, but that would be more for an M&A kind of an activity, not really for organic growth.
Right. Sir, can you talk more about this investment into partnership? Are you in talks with anyone? Can you give more details about this inorganic growth?
See, presently, we have just completed an acquisition in Turkey. And it's a smaller company, about 40-50 million euros. That gives us access to the 1.7 million car market. But other than that, we are still, searching for acquisitions. And we don't know, we don't have another acquisition at the moment, where we can say, yeah, we've identified this one, which we are going to go after.
Can you talk to us about how big is your PV business overall, looking at expanding in India? What's the presence currently in that segment?
Yeah, so we are. So basically, see, the passenger vehicle, segment for us is probably 63-64%, largely because, of our exterior lighting business, because that is itself 61%. So in India, basically only 10% of our revenues are in the car segment, where we play in a few products like, some engine transmission parts, and also the plastic interiors for cars. That's something which is kind of growing well. But having said that, our focus in India would be more the 2 and 3 wheeler parts business, and also to grow in the lighting market in India, because the lighting market for cars is, for the last 5 or 6 years, has not been a very big focus for us. So we have only been dealing with a few customers we have today, but now going forward, that's the area we want to grow in India, on the lighting segment for cars. So that's something which will be a focus. Other than that, I think our core businesses are in the 2 and 3 wheeler segment in India.
And Mr. Jain, what's the capacity levels that you're currently operating at? You're going to have all of this cash. You've got proceeds in the IPO. So what kind of expansion have you lined up, especially for the R&D?
So I think overall we would be close to about 75%, and on a global basis, we do spend about 700-800 crores on our capex, what we've been doing, and that's something organically for organic growth, and we've been growing at 20% CAGR for the last 5 years, and that's something at least we will want to continue. That's a kind of a capex which I think will continue, in the coming years also.
In terms of margins and sale, what are the long-term targets that you have?
Yeah, we do have actually. I mean, I can't share it with you, but I can just say that we are in a good place, and we're definitely kind of going to have, we're definitely going to be growing our margins. I think margin growth also happens largely more with revenue growth, and that's something we are, which will happen going forward. India business, anyway, I mean, we are at about a certain double-digit kind of margin. It's a lighting business which is at a little lower margin, about 8.5%. So that's something, we have to get into double digits. But that's very much on our mind, so it's margins, and also equally important is our return on capital employed. We have, that's something we have an internal target of 20, and that's something we are going to maintain going forward, whatever the growth may be.
Right, Mr. Jain, here's wishing you all the very best. Congratulations on your listing on Dalal Street. We look forward to more interactions in the future.